Meet the most capable CR-V Honda has ever dreamed of. The all-new CR-V Trail Sport Hybrid. With all-terrain tires and available enhanced traction control, it's built for wherever the day takes you. Heated front seats and a heated steering wheel? Ideal for winter drives and crisp early starts. And with generous cargo space, it's ready for big gear and even bigger getaways. The CR-V Trail Sport Hybrid. Learn more at honda.com/CRV.
On WhatsApp, no one can see or hear your personal messages. Whether it's a voice call, message, or sending a password. To WhatsApp, it's all just this. So whether you're sharing the streaming password in the family chat or trading those late-night voice messages that could basically become a podcast, your personal messages stay between you, your friends, and your family. No one else. Not even us. WhatsApp. Message privately with everyone.
Financial services is evolving at a rapid pace. Certainly in the last, say, 5 to 7 years or so, the pandemic was unprecedented and banks and FIs are still dealing with the fallout, right? Rising interest rates in response to hockey stick inflation saw established banks such as SVB and Credit Suisse completely collapse. Where the priority had previously been on innovation and customer experience and growth, suddenly banks were facing real market difficulties and the threat of contagion. And the focus has subtly shifted to securing core business-critical operations. This turbulent landscape has been further exacerbated by the uncertainty caused by the chaotic introduction of tariffs by the US and increased geopolitical tensions, such as the war in Ukraine and the escalating conflicts in the Middle East. So there's a huge amount going on that affects the banking industry. And banks themselves look and feel different. As we talk here in 2025, I've been a consultant now for almost 18 or so years, and I certainly feel that pace of change is happening rapidly. So, banks have rapidly upskilled their teams on modern digital practices, from UX through to engineering. Fintech is also no longer a looming threat. I mean, it's certainly been that way for years, but as we speak here today, it's absolutely a reality. Today's banks compete with Revolut or Nubank just as much as they might compete with any other incumbent. So what we're here to talk about today is, what does all this mean for the advice that those banks receive and therefore for the consulting industry? I'm David Barton-Grimley here at 11FS, and in this episode of FinTech Insider Insights, we'll explore how analysts, advisories, consultancies, experts, that whole wide industry of consulting can better serve financial institutions and help them navigate the changing financial landscape with greater flexibility, speed, and impact. We'll look at how new and exciting technologies can enhance delivery, how and when to partner and exchange with external support, and the type of challenges and opportunities external expertise can help you overcome. So, I am joined by some experts who spend all their working lives looking into the ever-changing market and advising their clients. And first up, we have Ross Gallagher, Head of Consulting at 11FS. How's it going, Ross? So listeners may know you as a regular host of FinTech Insider, and that's all very well and true. But could you give a quick potted history of your background and consulting roles ahead of our discussion today?
Yeah, for sure. I mean, it's great to be here. I mean, David, like you, I've spent my career consulting with clients in one guise or another. I guess specifically over the last 8 years at 11FS, the focus has really been on working with them to sort of fully harness that true potential of digital, right? Build innovative propositions, but, in a way that customers actually love. I now run the consulting business at 11FS, as you said. I guess for anyone that doesn't know, we're a specialist financial services consultancy. We work with clients in markets all around the world and really focused on helping them solve for their sort of biggest and most important challenges.
Awesome. And next up, we have a welcome return to a regular guest of the show, Kate Drew, Director of Research, CCG Catalyst Consulting Group. Thanks for joining us today, Kate. Listeners may be familiar with you and your fantastic insights on the week's stories on our news show. But tell us a little bit about your role and background at CCG.
Absolutely. Well, first of all, thank you so much for having me for this conversation. Like you said, I lead research at CCG Catalyst. We're a boutique financial services consulting firm in the US. And I oversee our entire research practice. That includes all of the research that we publish and on the client side as well. And, I obviously, this is, a topic I'm super passionate about. I've been in the consulting world for the last 10 years or so, but always on the research side. So my job is really helping our clients understand the market, the wider market, the market that they're in, and how to plan for the future in the context of those trends.
And actually, just on that exact point, Kate, it probably makes sense to come first to you for a bit of a view on what you've seen. In the introduction, I mentioned all sorts of different things really that have happened, and I'm sure there's even more. I mean, we can talk about things like AI, for example. Like, what's your view on some of those more kind of macro shifts that you've seen banks face into?
Yeah, I think the last few years have been especially interesting because when I first started out in consulting, all of our clients were really chasing innovation and, chasing the future. And there was a lot of enthusiasm and there was a lot of excitement. And over the last few years, we've really seen that shift. In the US, I think it's for a number of reasons. I think, obviously, the collapse of SVB was extremely problematic for the industry. There's a lot of regulatory uncertainty as well. And there's also a lot of competitive pressure, right? It's very easy for customers to shop around for rates. It's putting a ton of pressure on the traditional banking business model. And so if you look at sort of those two things, the competitive landscape and the uncertainty that's been created by some of these macro factors, you've really lost a lot of that enthusiasm, I see for just, sky's the limit, right? And that's definitely been challenging to try and, help institutions navigate their way through that when, in many cases, having an appetite for innovation is still the answer, even if it doesn't feel, quite appealing, right now.
Amazing. Ross, what do you think?
Well, I guess just sort of bringing that point to life, I think I really feel for banks and kind of like financial institutions at the moment because it's really difficult. And of course, they're so exposed to everything that we've seen around inflation and the rise in interest rates and cost of living. I almost feel like there's sort of like the world pre-2021, when inflation and interest rates started to hockey stick, as you said in your intro. And then there's the world sort of post-2021. But I think the point, Kate, that you made about, innovation not just being something that we should be thinking about in the good times, I think is absolutely spot on. Because when you think about Mondo, when you think about Revolut, all of these guys were kind of born out of the financial crash in the late 2000s, right? So I think some of those bigger threats that really impact on those incumbent players emerge when, they're probably already consumed with those business critical things, David, that you mentioned in your intro. So I think right now is a really, really interesting time for that perspective, because with how turbulent everything has been over the last 4 or 5 years, and I think banks have had to become naturally more inward focusing to really deal with that stuff. And then you think about the transformative potential of emerging technologies like AI that are so fundamental. I think we're at a bit of a tipping point. It's a really interesting moment.
Yeah, I agree, Ross. It's so hard. That's something I've also heard from my clients as well, is they have to do all of that with less money. But don't stop doing all of that. Like, do it. And I've certainly seen, just on a personal note, clients that I've worked with over the last few years, it's really, really difficult. It's really hard. Kate, I'm going to bring you in.
Yeah, I was just going to add that in the US, I mean, I feel that so much because we work with a lot of community banks that don't have, the resources to necessarily access all the latest technology. So in an environment where everything is already difficult and you know that technology doesn't stop moving forward just because things are difficult, it becomes really, really hard to prioritize and kind of navigate through to the future. Because you bring up AI, and you think about, okay, this is advancing at an extremely rapid pace that is industry agnostic, and it's going to continue to do so. It's not going to stop just because we're having, a difficult time at a macro level. So you need to be thinking about the future from that perspective too, which is really, really hard to do if you're already not an organization that is set up for advanced technologies, which, many community banks in the US are not.
Yeah. One more thing to throw into the mix as well is all of that is compounded upon the fact that certainly over the last 10 years, a lot of banks have learned that these big kind of multi-year digital transformation programs or IT transformation programs tend to fail. And the failure rates globally, there have been all sorts of reports and data out there about that, are double-digit percentage, well into double-digit percentage failure rates. And certainly, if you work in banking and you're in IT or you work with IT, you can see that. You can see it's well, what are we doing here? Is this program ever going to end? Is it going to move into BAU? Are we ever going to be able to release products and features on this on this service, or do we have to pull in or migrate onto a different platform, or what on earth do we do? So there's also that there's that kind of a lot of learning has taken place, I think, in a positive way. We kind of now know, I think, a lot more about what does and doesn't work in some of these areas. Russ, I'm going to bring you in.
Yeah, and it's such an interesting point. And, some of that is legacy tech in terms of the challenges there. But I think more so it's actually it's to do with culture, right? Internally. The mindset of these fintechs that have come to market and been really quite successful, they're set up in a way and they operate in a way that they can just move much more quickly. They can be much more responsive to customers' needs. They're much closer to customers. They have very different budget cycles. They're set up and they operate fundamentally different. It's difficult to do that at scale. And so, yes, I agree that there are lots of learnings. We've seen a greater level of disruption over the last decade or so in financial services in this industry than we've seen probably for 150 years before that, right? So there are absolutely going to be learnings from that. Not to keep drawing it back to AI, because this isn't a podcast necessarily about AI, but I think when you look at something like that then through the lens of AI, it becomes even more interesting, because I think you've got those sort of established incumbent players with their legacy tech, legacy culture, both of which I absolutely agree with you have come a million miles over the last decade or so. Then you've got the sort of the fintech, what we would call fintechs, those ones that have come to market over the last decade or so, who are just set up better to respond to things like AI, both from a technology perspective, but then also from a culture perspective. But then you're looking at the new wave of those businesses, those challenges that were actually sort of born AI native. And so there's almost tiers to this. And I think it's that for me, if I was sitting in a large established bank right now, that's what I'd be looking at as a major, major threat.
I wonder, I think that major shift, all the disruption that occurred in the last couple of decades was really with that shift to digital, right? With the shift to digital, to mobile, to new interfaces. And I think a lot about what is that next shift going to look like, and will we be able to take the learnings into that shift? And I think that's essentially what you're talking about too. And I wonder, is that shift AI, and what is it going to look like? Because it's so easy to conceptualize what digital looked like now, but before, when we were on the cusp of it, it was a lot less clear.
Yeah, I agree. And we're on the cusp of this next thing, which is also probably equally, well, I don't know, even more unclear, I think, than than it's ever been. I'd like to just bring the conversation. We are absolutely going to pick up on AI and the future of consulting in a second. I'd love to ground the conversation in how these shifts we're talking about has resulted in what clients are asking for from external help. And to the question to the both of you, how have you seen those asks evolve? Like what are they? And I appreciate this is a really difficult question, right? Because the entire outsourcing industry is worth many hundreds of billions of dollars a year, right? But I guess from each of your kind of areas, maybe Kate, we come to you. Like, what kind of shifts in those asks, those projects? Like, how have they changed?
Yeah, it's such a challenging question because they've changed in so many different ways. But maybe I'll talk a little bit about strategic planning because from a research perspective, that's usually where I am most involved. And I think, you know, what I used to hear in those sessions, we would talk about things like open banking or banking as a service or, even AI a few years ago. And there was, a lot of enthusiasm around how can we innovate. Now, those conversations, we're still talking about those things in some capacity, but the ask is more, how do we deal with this existential threat? Which is a much bigger question and a much harder question. And keep in mind, like I'm typically talking with community institutions, right? They're a little bit smaller. They're not the big banks. But it's a very different conversation and it's a much harder conversation. And there are places to kind of pull innovation into that conversation. There should be. But the ask is much less like, how can we, future-proof our business and how can we kind of, with a much more positive, optimistic spin, I guess, and a lot more, how do we deal with this reality?
What do you think, Ross?
It's really interesting, isn't it? Because I agree with everything that Kate has said, because the sentiment is important. I think it has shifted from and maybe actually this goes back to what I said earlier about the world pre-2021 and post-2021. There is that shift in mindset from sort of like optimism for the future to like, I'm really scared about the right now and help me sort of deal with that. It's really difficult because the last 4 or 5 years, like post-pandemic has been so turbulent. You're absolutely spot on in your intro when you mentioned banks like Silicon Valley Bank, Credit Suisse, I think, Signature Bank, big sort of established financial players that essentially collapsed. And that's really scary in a financial services context, right? Contagion is real and that is something that has to be contained. And I think the other thing that has to be pointed out is that contagion and that knock-on effect in a social media digital world is potentially a lot more severe than what we saw in 2008, right? Because people can withdraw funds and rumors can circulate on social media and all of that sort of stuff can happen really, really quickly. And so, I think there has been a trend where banks have switched focus. They have moved away from these large scale transformation and innovation agendas and really focused in on what's core. And so I think that is a big shift. I completely agree with what Kate said. It's less about how do we take on the fintechs, how do we position ourselves for the future, and more about, this is kind of scary. Help us figure this out right now.
Yeah, there's also a pragmatic angle to that as well. I mean, certainly what I've been hearing from clients is what I want to know is pragmatically, what are the things that I should be doing in order to make this change? I'm no longer interested in, the big picture. I'm no longer interested in slides. This is another thing as well. Just like the sort of material that we work within, so don't present to me. Presentations don't work anymore. I know what this thing is. I know what digital is. I know what a digital channel is. I know what mobile banking is. You don't even tell me what that is. But what I want to know is very specifically. And so I think the kind of craft of consulting in some ways, and this is something that has I found is a very good thing, is challenged to constantly hit a level of depth that I think if we're being honest with ourselves, like maybe 10 years or so, was very shallow, right? Like a lot of this was like, hey, you need to be digital. Go get yourself an app, You need connected experiences, right? You need personalization. And whilst all of that was true, and maybe it was at that surface levels because a lot of this stuff didn't exist, right? Maybe you could draw, to your point earlier on, Kate, about AI, you can draw parallels to. That's kind of where we are at the moment with AI. But I think it's been great because you could also argue that the whole point behind looking for external advice is that you're hiring someone or a skill or expertise that you don't have. You don't have that, and you need that, fast, right? You need that quick because, to the points that both of you have been making, the costs have been compressed. We've got to do this in a much shorter amount of time. So I've definitely seen that kind of the depth of the ask, the kind of way that we interact with customers as well is in some ways a hell of a lot better, right, than it used to be. It's like, come in and immerse yourself in my organization and tell me genuinely how I might be able to make this change, or educate and train, co-locate, all of those kind of things I think have gotten a lot better over the years.
I would agree with that. And I would also say, I think the conditions on the ground have almost driven that shift, in that it's a lot easier as a consultant to step back when you are doing, the kind of high level innovation work. But when a client is asking for your help in survival, it almost creates like a human element that you have no choice but to embed yourself, because that's the only way you're really going to be able to help.
Agree. And that is a symbiotic relationship, right?
Yeah.
Ross?
Yeah, just I think that shared sense of ownership around your client's problem, their challenge, I think becomes really important, right? And actually, I was sort of reflecting, David, on what you were saying about how the culture in a lot of these large organizations has evolved over the last sort of 10, 15 years. And I think maybe this is a reflection of that, right? It feeds through into how they want to work, how they want to partner, how they want to engage, how they want to solve problems. And that point about really embedding that, creating that real sense of shared ownership, I think becomes really important in this context.
Yeah, I absolutely agree. I'd love to just ask each of you, and I can ask myself, I guess. I mean, how do you as consultants and strategists stay on top of all of these market changes? Because it's so fast. There's also something that I've noticed as well. There are now so many different things that you need to be on top of and understand and have experience delivering, right? How do you kind of stay on top of that? Kate, what do you think?
So I would say, I love this question because I would say that is my job. And I think,
Yes.
as a consulting firm, maybe I'll just take it, as a step back. As a consulting firm, I think it's really important to have dedicated research practice, because not all consulting firms do. And I think having that capability inside of the firm, kind of, a lot of my job is not just, staying on top of market trends and education with clients. But I would say, if we pull it back to the firm level, I think it's really important to have a dedicated research effort that can kind of centralize all of those insights and push it out, to the public and also through the firm.
Ross, what do you think?
I agree. I mean, I was going to lead in a very similar way to Kate by saying that's kind of the job, but in practice, I think this is where sort of like specialist or boutique consultancies kind of come into their own, right? 11FS, we are very specialist within financial services. We are a collective, essentially, of people who have built and delivered things in financial services, who are really, really passionate about moving this space forward. And everything that we do is about really staying very much at the forefront of the conversation as a means of driving the industry forward. We often say, for example, with this podcast or with the reports and all of the content that we put out there, that we want to put, the content is really designed around moving that conversation forward. And so we are fully immersed, but really, I suppose, have skin in the game in terms of like operating at the forefront, and really helping to to move things forward and really shape that conversation.
Good point, actually, that you raised, Ross, about the kind of boutique providers, like all of ourselves on this call. We all work at firms that are boutique providers in certain ways. There has been an atomization, hasn't there, of much more pure play agencies, consultants firms, expert networks, for example. There has been this gradual, atomization from very large firms, which are still there and still growing like the clappers, right? Big firms haven't gone anywhere; they're still there. But it is interesting to see how clients are commissioning work in different ways to boutiques, to freelancers, to expert networks. There's that whole kind of area about how the way that the consulting industry is structured is changing. And I think like when you're a smaller firm like ours, you can be more nimble in certain ways. And if what clients want is to be more nimble, then that helps a lot. All right. And on that note, now that we better understand the current temperature in the market and the role that advisors and consultants can play in driving transformation, we're now going to be looking closer at what that means looking forwards. So don't go anywhere.
This episode is brought to you by State Farm. Knowing you could be saving money for the things you really want, like that dream house or ride, is a great feeling. That's why the State Farm Personal Price Plan can help you save when you choose to bundle home and auto. Bundling, just another way to save with the Personal Price Plan. Prices are based on rating plans that vary by state. Coverage options are selected by the customer. Availability, amount of discounts and savings, and eligibility vary by state.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider. Welcome back to FinTech Insider Insights, where we're discussing the macro challenges in the market and how FIs can navigate them while engaging external specialists to help them. Now we're going to look specifically at future opportunities and the role new and emerging tech can play in synergy with specialist advisors on driving real industry change. So in the first half of the show, we've talked about challenges and headwinds in the market so far, roughly since 2021, let's say. But if we look forward, we've already started talking about AI, and it is already maybe in the early stages of having kind of big change, or at least potential for big change within the financial services sector. Kate, how do you see AI and like consulting about AI?
I mean, I think the most important thing, and again, our clients tend to be community institutions. I know I've said that over and over again, but I think it's important, especially in this context. They don't have a foundation in AI the way a lot of the larger banks might have foundations in machine learning that allow them to take advantage of some of these more advanced capabilities, Gen AI and agentic AI. So for us, it's really about making sure that our clients have a strategy and a governance policy around artificial intelligence, and that they lay those foundations now, because for the past few decades, other parts of the market have been moving forward. And now we're at this moment where everything is going to leap ahead. And if you don't have those foundations in place, you're really going to be very, very far behind. So that's really how we're thinking about it, is how do you get those foundations in place? How do you think about how AI makes sense for your business, what the opportunities are, and then importantly, how do you build governance around that?
Ross, what do you think?
No, I think that's exactly right. I think it's funny, right? Because like we're talking about AI now like we were talking about, I don't know, blockchain or something like 4 or 5 years ago. And, it's sort of like every so often there's like a new trend and a new buzzword that is sort of everywhere. It kind of loses all meaning when it's just like AI, AI, AI. And I think sometimes what we're lacking, and I think, Kate, you touched on this, is like, what's the use case, right? What's the opportunity? Where is AI going to add value? Let's start there and then, figure out what the opportunity is to solve it for the technology. I think there's also something here about how organizations are sort of culturally set up to embrace something like AI. We've seen lots of examples of banks sort of banning the use of AI tools and all of that sort of stuff. So it feels like we're still in that kind of like feel our way phase around, we're kind of scared of this, so we don't really know what it does. But then going a little bit further, when you think about initially how big banks sort of like embraced, and I'm doing air quotes, digital, it was really about stripping cost out of the equation, right? So they closed branches, they got rid of people, all of those things are very expensive. And they just sort of forced people, whether they sort of wanted it or not, to self-serve on these sort of janky digital channels. And that obviously left a lot of value on the table. And I think that's where the opportunity comes from for the Monzos, the Revoluts, the insert successful fintech here. And I'm wondering what that journey looks like from an AI perspective. And I feel like the downside risk is potentially a hell of a lot bigger, because I think the transformative potential of AI is a lot more fundamental.
I mean, downside risk is one of the things we hear the most from very large institutions.
Right.
And it's actually interesting to draw that comparison, Kate, because I think, a large bank absolutely has a ton of generative AI stuff. But I think the real truth is that a lot of that is still very much in kind of AI development labs, incubators, experimentation, sandboxes. There may be some kind of foundational cases coming through in production. I mean, we're seeing, and we've been talking about it on this podcast, things like wealth managers and customer support and stuff like that. But I think, certainly, we've been speaking to a lot of big banks around the world, and it's this kind of, yes, there is a huge amount of potential, and it's sort of almost boundless, which is where you draw those very, very important comparisons to blockchain, Ross, as you said. But when it comes to launching them in front of customers, this is where the downside risk is really coming. And then bringing that back to what we do in consulting and the kind of things that clients are demanding, I think, of consultants, is to try to navigate, to try to square that circle between value potential that is out there and how pragmatically and practically as a bank you go ahead and do that without being shut down,
Yeah. It's because the technology isn't ready for prime time yet, right? Hallucination rates are still between 1% and 30%. That's a huge, huge swing. It's way too high on the high end. And in in an industry like banking and any highly regulated industry, you can't, you simply can't take on that kind of risk. The question, though, is how do you get yourself ready for when the technology is ready for prime time? Because that's going to happen a lot faster than you think it is. And if you're, kind of resting on that, we can't put it in front of customers, it's not ready yet. Like, just keep in mind that ChatGPT launched only a couple of years ago, and things have changed dramatically. So where are we going to be in 5 years? You need to be ready for that shift, even if it's not ready now. And I think a big part of that is really education, making sure that you're comfortable with the technology where it is, that you understand how it works, that you understand where it's coming from and the different, opportunities out there. And also that you understand what problems it can solve and what problems it can't. That's really important, because I think that, we often use it as a catch-all for everything, but it's not. AI is a portfolio of technologies. It's It's not one technology. And, those technologies do different things. So understanding that portfolio and then being able to map it to your problems, I think is, very, very important for financial institutions. And it's also an area where consultants can help.
Ross, what do you think? Any thoughts to add?
I completely agree. I think it goes back to what we talked about in terms of like really identifying and really focusing on the opportunity, and then, deploying it in the right way. And I think, like, what does that look like in terms of enriching the user experience? And you've got to think of it more holistically, right? This isn't just about leveraging a piece of technology to necessarily solve for one very well-defined thing, but actually, how does it fit into the broader user experience? At 11FS, we talk a lot about, things being real-time, intelligent, contextual, human, extendable, social. And I think, it kind of goes to like, from a financial services perspective, like what are the outer bounds of our ambition with this, right? I think we were overly cynical initially when we sort of looked at digital and kind of went, we're just going to try and replicate the in-branch experience, and ended up with this sort of like poor version of it. But I think with these emerging technologies, there really is the opportunity to go way beyond that. And actually, what does a great holistic customer experience look like, delivered through a digital channel, but leveraging emerging technologies like AI? And caveated with Kate's point that sure, the technology isn't there necessarily today, but you don't want to be the person that wakes up in a couple of years and realize that you don't have the foundations in place.
Yeah, it's a tension, right, between getting it right for now and understanding what is coming up in the future. And I think what is kind of amazing about the financial services industry now is that you always have like either another player or another kind of like type of business to compare against. And that's that sort of incumbent fintech view. Fintech is more nimble, it takes more risks, when you're an incumbent bank. And it's just look at LinkedIn, for example, as a big source of pretty much every single fintech out there claiming, we do this AI, we do that AI, and it's incredible. And I think one of the most sort of present examples of this is Klarna. So Klarna making a big deal about, how they were going to be laying off lots of customer contact stuff and all that. I mean, you can go and read the information online for yourselves. And then having to roll that back, being like, well, actually, does it scale to the extent that we would need it to scale in order to roll this out? And this is what a banker and a big bank will always tell you, time and time again, is that, we have millions of customers, but this thing has to work. It can't, this is all very well saying it works for 1,000 or 2,000 customers. That doesn't make it a hardened technology that we can deploy. But I agree, Kate. I think like what we all see in the consulting industry is that it's happening. The incentives are there, right? Whether you're OpenAI or Gemini or Anthropic or whatnot, that you need to solve these problems because that's the big, multi-billion-dollar bet. You have to get there. It needs to be more auditable and explainable. It needs to hallucinate less.
Mm-hmm.
So I think I agree. I think we all see this kind of coming and barreling down. And I think it opens some very interesting questions about what this means for the consulting industry. So I don't know whether you guys have seen this, but Intel made a big announcement, I think it was like a week ago, about outsourcing their entire marketing function to Accenture based on the AI capabilities that Accenture has. And they've basically made a big, bold statement saying, hey, we don't need to do this anymore. We don't need to hire a huge team of marketers when we can actually rely on external consulting help powered by AI. I mean, it's kind of incredible, and in some ways a bit of a counterintuitive sort of thing, because the intuitive part of the way you would see that is that, okay, well, maybe Intel can just do so much more of this themselves. But actually, here is an example of a consulting firm massively benefiting from the example of AI and what AI can do. So yeah, I thought it was kind of an interesting thing to surface to you guys and to our listeners. Like, it's unclear yet what this actually means for the consulting business model, I think, is where I'm going with this. I wanted to ask you both a question about funding. So we now see ourselves, the fintech downturn is a couple of years through. It is getting better. We talked so much on the Fintech Insider podcast and the News and Insight show about shifting trends in investments for things like fintech, VC flows and whatnot. How do each of you see the future funding flows for innovation and for research globally? Do we see that increasing? Do we see it flatlining? Like, what kind of signals have each of you picked up on, maybe from your clients and the sectors that you work in? Kate, any thoughts on that?
I think that we're going to continue to. We're starting to see some signs of rebounds in the private markets, and I think we will continue to do so. I think what's really exciting for financial services is a lot of the activity we're seeing is B2B in the fintech space. And for a long time, obviously, it was very focused on consumer fintech, and there's still some great consumer fintechs getting funded today. But I think the capital flowing into B2B fintech providers that are really looking to sell technology into banks and help solve some of those issues is really exciting, and I think is going to continue to be exciting long term. Obviously, in the context of AI, but also, just generally helping banks move away from best of suite if they want to, and better participate in best of breed strategies. The ability to get technology from more providers that are doing very specialized things. And obviously, at CCG we really try and operate at that intersection of banking and fintech. So for us, that's really, really exciting to see.
Awesome. Ross, what do you think?
I think it's still really tough, right? From a funding perspective, obviously, in response to everything that we've seen around interest rates and everything sort of post 2021, I think a lot of the funding that had been so freely available for a really long time sort of dried up, right? And I think there is still a lot of funding that's just kind of gummed up in the system. I think there were a lot of sort of big established fintechs that we might have expected to see IPO by now. When you look at, Klarna is a great example, right? You mentioned them already, but they were poised and ready to go. And then obviously it was derailed by the tariffs announcement by President Trump. And obviously those types of big liquidity events, investors get returns, and you can sort of recycle that funding back into investing in other businesses. We haven't seen funding go completely off a cliff, but I think definitely investors are being much more picky and much more focused in terms of the businesses that they are investing in. We've seen, Revolut did a big secondary round, so you can release some of it that way. But I think, in terms of getting back to the levels of funding that we saw sort of pre-2021, I think it's going to take us a little while to get there.
Yeah, I agree. I've seen that as well. I think the sector's point is also very, very interesting. You're right, Kate. Like, it does feel like retail banking, at least from an innovation point of view, right? And there's a phenomenal amount of work to be done in that area, but there is definitely a lot more demand coming from the SME B2B sector. Corporate, treasury. These are the kind of things that just never really surfaced up on the innovation agenda years ago are now very important and very front and center. We did a report about the sort of changing shape of commercial banking about a year back, and it was just incredible to see how much excitement and interest in solving some of those really sticky corporate problems, which turn out have a phenomenal impact on bottom line. And I think maybe just to bring full circle around to the beginning of the conversation, if the emphasis is now on cost cutting and optimization, you therefore then look to the parts of the business where you can get the most efficiency out of that cost cutting and back office operations, whether it's for the bank or whether it's, the bank providing those services for their end clients, like corporate banking and, treasury management, for example, become extremely compelling, because that's where you can make some of the biggest change, I think. And so to wrap up this podcast, I think we can sort of bring it back to talking about our colleagues in the industry writ large. And I'd love to hear from each of you, what one piece of advice, say, you're speaking to a grad who's just starting in the industry, which is really tough. I think it's a really tough time to be a grad. And, these grad programs were so fundamental to the flywheel of consulting for so many years. What would that one piece of advice be to the grad? How does one be a consultant in 2025? Kate?
I would say get as much on the ground experience as possible. And I have worked for larger consulting firms where we were, deployed into banks, but, we're never really bank employees, right? We came up in consulting in that way. And I've also worked for, smaller consultancies like CCG where most of the consultants have a banking background. And I think that really helps a lot. So I would say, it's great to work for a big firm. You get a ton of experience, you learn a lot, but get as much on the ground experience inside of who will be your clients as you possibly can.
Yeah. I mean, I think that's spot on. But I think as well, it's very easy to get lost in the sort of like the corporate nature and the jargon and all of that sort of stuff. I think like staying human, I think at the end of the day, ultimately, it goes back to everything that we said about that obsession with your customer's problem, that sort of like that level of empathy around like, what is the problem that they're trying to solve? What is it that, we can bring to sort of help you solve that? And I think keeping that human bit, I think is going to be really, really important because ultimately that empathy, that obsession with your customer's problem, I think that's what's going to differentiate you when it comes to the impact that you're able to deliver.
Those are amazing points. There's nothing that I can add to that. They're brilliant. And by the way, Ross, I think the other interesting thing about what you're saying is that will never change. So long as there is a consulting industry, that is static. And that is a good thing. Because that's our industry.
Yeah, it's absolutely a good thing. And look, honestly, I think sometimes maybe the perception of consulting can be like that it's almost quite cynical, right? This idea, this sort of caricature of like big, expensive teams on endless projects and all of that. But, I think the reality, and certainly the reality today, I think is very, very different. Everything that we've talked about in terms of recognizing the shift in our clients' realities and adapting to that, but wanting to, jump in with them and really create that shared ownership that we talked about in terms of helping to solve their problems. That's sort of the industry that I recognize, and I think is adding a ton of value and will continue to add a ton of value.
Yep, always be helpful. And on that note, that wraps up today's discussion. And a big thank you to the both of you for your time and expertise for breaking down this very important topic with me today. And quite difficult for us because we're all consultants on this pod. And it is difficult to talk about the kind of stuff that you do. I think that has to be recognized, right? It isn't an easy thing. I mean, I get asked a question quite a lot from, people, friends or whatnot who work in very different industries and ask me what I do. And it's always a very difficult answer to give in a sentence. So thank you again so much for joining me to both of you. Where can people connect and find out more about you and the consulting firms you work for? Kate?
You can find me, Kate Drew, on LinkedIn and CCG Catalyst at ccgcatalyst.com.
Awesome. And Ross?
Yeah, you can find me, Ross Gallagher, on LinkedIn. And if you want to find out a little bit more about 11FS and the consulting work that we do, then 11FS.com.
And you can also find me on LinkedIn and also 11fs.com. And thanks for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or FinTech Insider or email podcast@11fs.com. Thanks very much and goodbye. In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.